hey, you're about to get a 6.2% raise. Not really. Hi everyone, Keith Wilson here, helping you to be wise with your money. Listen, on August 8th, 2020, President Trump signed an executive order for what they call a payroll tax holiday, and that's to take effect September 1st of 2020 through December 31st. Now, this is not a tax cut. More on that in just a minute. But first, let's define what a payroll tax is. So the payroll tax consists of two parts, Social Security and Medicare. Social Security is financed by 12.4% payroll tax on wages up to an employee's taxable earnings cap of $137,700 for 2020. Now, half of that, or 6.2%, is paid by the worker, and the other half is paid by the employer. Now, with the payroll tax holiday, it only affects the Social Security portion of your paycheck. This applies to workers with, you got to have a biweekly earning of $4,000 or less, or roughly $100,000 per year or less. So your paycheck would be larger each pay period by 6.2%. Hey, that's like getting a 6.2% raise between September and December 31st. Sounds pretty cool, doesn't it? Well, before you get too excited, there are a few things to consider. First of all, like I said before, this is not a tax cut, but rather a tax deferral. So in its current form, these taxes would have to be paid back between January 1, 2021 through April 30th, 2021. That means during the first 4 months of 2021, both you and your employer will have to pay 12.4% of your paycheck, thus doubling what is being withheld now. And if it's not repaid by April 30th, 2021, then penalties and interest would apply. Now, there's been some talk of making this a forgivable loan next year, but the guidance it's very vague, and who knows if that will go through. Another thing that is not clear is, what if the employee quits? Well, I mean, what if you quit? What if you retire before December 31st? How would the employer withhold those taxes starting next year? The IRS may very well go after the employer to get that additional tax. So here's a couple of options you may want to consider. Number one, just simply opt out and continue with withholdings, and that way you would not have to worry about paying it back next year. Number two, if you decide to participate in this payroll tax holiday, you may want to consider saving that amount and not spend it, and wait and see if it does become a forgivable loan next year. If not, you will have the funds available to pay the taxes back. In the end, again, this is not a tax cut. Think of it as a short-term interest-free loan that would have to be paid back during the first 4 months of next year. For many employees, they may be better off if the employer keeps withholding the tax. For the average worker, it will provide really relatively little additional income, and it will last just 4 months. And then it will result in twice as much being taken out for Social Security in early 2021. Now, if you would like to see more videos like this, be sure to hit the subscribe button below. Thank you, and remember, be wise with your money.